Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China, because you may have seen some articles in the press talking about the GDP in the first quarter of 2025, which actually came in significantly higher than expectations. China announced that its year on year GDP was running at 5.4%, and that compares with the target rate of 5% for 2025. So, based on those headlines alone, you might be led to believe that China is doing better than you thought it was. But with all of these statistics, you always need to look at the details. And when you dig down into what's happened in the first quarter itself on a standalone basis, it only achieved growth of 1.2%. And obviously, if you were to annualize that, multiply it by 4, that would come in at 4.8%. But also, that doesn't take account of what's going on with the tariffs, which obviously are going to have a hugely detrimental impact on China's performance for the rest of 2025. And the reason why that tariff is going to kill China's profits is because 40% of GDP for China is now being derived from exports, and 15% of China's export market is the USA. So there are storm clouds brewing right now in terms of what's likely to happen to China over the course of the rest of this year. So in today's video, we'll go through exactly what's going on with GDP. We'll have a look at where we are with regards to those export figures. We'll also have a look at some really interesting data in terms of what China is investing into infrastructure at the moment, and also the amount of tax that it's taking from its companies, because that's come down to a record low. There's been reports that up to 50% of Chinese businesses are actually making losses at the moment. And one of the reasons why China is struggling across the board is because of what's happening in the property sector. So we'll go through the details of what's happened with new home prices and sales and property investment in March. And then finally today, I'll wrap up with my summary as to what I think is likely to happen in China over the rest of 2025 and what this means for the Chinese economy, but also the global economy, because let's not forget that China is the second biggest economy in the world, and what happens in China will have an impact on everybody else. Before we go on any further today, I want to talk to you about investing.com, who I've partnered with for today's video, and is the go-to financial site that many of us use on a daily basis. And if you subscribe to investing.com, it gives you access to Investing Pro, which is a powerful AI-driven tool that gives you lots of financial data and information at the click of a button. If you're looking for ideas, Investing Pro gives you the portfolios of legendary investors such as Warren Buffett at the click of a button. You can see all of the different stocks that he's invested into if you want to copy that strategy. But one of the features that I really like is Pro Picks, which gives you AI-driven strategies that have consistently outperformed the S&P 500. And the great news is that I've managed to secure a discount at the lowest possible price. So click the link in the description below for 15% off Investing Pro and start using Investing Pro today.
China's first quarter economic growth beat expectations. GDP grew 5.4% from January to March from a year earlier, beating analyst expectations in a Reuters poll for a rise of 5.1%. Retail sales, a key gauge of consumption, as well as bank lending, topped analyst forecasts. Industrial output has also picked up speed as factories rush shipments to beat the latest tariffs from U.S. President Donald Trump. However, analysts expect that trend to reverse sharply in the months ahead as the hefty U.S. levies take effect. Moreover, higher unemployment and persistent deflationary pressures are fueling concerns over weak demand.
So as you've just heard there, China's GDP growth for the last 12 months has come in at 5.4%. However, if we look at this chart, it shows the quarterly breakdown of GDP performance in China. And what this shows is that in the second quarter of 2024, GDP increased by 0.9%. It then rose to 1.3% in Q3, and in the final quarter of 2024, it was up by 1.6%. But as you can see, in the first quarter of 25, GDP only increased by 1.2%. And as I said at the start of today's video, if you annualize that growth figure, it would only get you to 4.8%. And that would be short of China's target of 5%. However, that assumes that the rest of 2025 continues as the first quarter did. But as we know, the world has changed because Donald Trump has announced his reciprocal tariffs, and they are going to have a devastating impact on China's exports. This chart shows the contribution to China's total GDP provided by exports dating back to 2010. We've got two lines here. The black line shows the quarter by quarter analysis, and the yellow line shows the full year. So that's basically a 12-month rolling figure. And if we look at the far right hand side here, you can see that the latest data for the first quarter of 2025 shows that the contribution from exports was up to 40%. And that was the record level at any point in the past 15 years. And one of the reasons why the contribution from exports has risen so significantly is because the contribution from property is down substantially. If you follow the channel, you'll know that what's happened in the property market over the last few years, we've seen the market going into decline. And so it's no longer having the same sort of impact as it did in the first 20 years of this century. So China is now more reliant upon its exports for generating GDP. And this is obviously going to prove an issue given the fact that Donald Trump has now announced that he's applying 145% tariffs to all imports from China. And the USA is the single biggest market that China exports to. It represents 15% of all of those exports. This chart shows China's trade surplus dating back to 2000. And the trade surplus basically looks at the difference between the value of all of your exports and the cost of all of your imports. So China, as we know, is a manufacturing base, and therefore it's exporting more things than it's importing. And we've got two different coloured lines on this bar chart. The black lines show the goods trade surplus with the USA, and the blue line shows the surplus with the rest of the world. And what you can see here is a very clear trend over the past 25 years. The surplus has been increasing significantly with both the USA and the rest of the world. And the most recent data shows that the surplus at the end of 2024 was up to $300 billion. And of course, this is one of the reasons why Donald Trump has imposed his reciprocal tariffs. He's saying that it's not fair that China is selling a lot more to the USA than the USA is selling to China. But as you can see, the trade surplus with the rest of the world is actually significantly larger than it is with the USA. However, interestingly, despite the fact that China is achieving these huge trade surpluses, the tax revenues that China are pulling in have been falling over the past few years. The yellow line here shows the tax revenue growth rate dating back to 2011, and the black line shows the nominal GDP growth rate. So as we know, China has been achieving GDP growth of around 5% over the past few years. So you would have expected the tax revenues to be relatively consistent. However, if you look at the yellow line, you can see that since the middle of 2023, tax revenues have been falling, and actually in 5 out of the last 6 quarters, they've been below the zero line. So tax revenues are going down despite the fact that China have been making these huge trade surpluses. And what that tells us is that Chinese businesses are losing money. They're not making profit, therefore they're not paying tax, and so the Chinese government isn't receiving that tax revenue. So whilst they are actually selling lots of things, they're not selling them at a profit, and that's going to be a major problem for China, because if they're not getting in any revenue, they're going to struggle to reinvest into the economy. And this chart shows the quarterly change in spending in the general public budget on infrastructure related projects in China dating back to 2019. And what you can see on the far right hand side here is that in 2025, this figure has moved into negative territory. So China isn't spending as much today on infrastructure than it was historically. And the reason for that is because the Chinese authorities are struggling for cash flow at the moment. And this is going to prove a major problem for the rest of 2025, because as Donald Trump's tariffs kick in, the Chinese exports are going to fall. That means that even more companies will move into a loss-making situation, they'll pay less tax, and therefore the Chinese authorities will have even less money to invest. This chart shows the year on year movement in new build house prices in China, which is the key metric for the housing market over the last 12 months. And what you can see here is that year on year prices fell in March 2025 by 4.5%. And the obvious thing that jumps out at you from this chart is that prices have fallen in every single one of the last 12 months. The scale on the right hand side of this chart starts at 0% at the top and goes down to -7% at the bottom. But the situation is actually much worse than this, because on top of the 4.5% fall in March, if we expand the scale of this chart to show what's been happening with house prices over the past 3 years, you can see that in March 2024, prices fell year on year by 2.2%. So the 4.5% fall in this March is on top of the 2.2% fall 12 months ago. So we've got a compounding problem here. And this is obviously a major problem for China, because in the first 20 years of this century, the housing market was really fueling the economy. As the property developers built more and more properties and Chinese individuals invested and spent lots of money on all of those properties, it fueled a huge boom in the economy. That boom is now in reverse, and the property sector is shrinking, it's struggling. Lots of property developers are going bankrupt and becoming illiquid or being nationalized. And the Chinese people have lost confidence in property, so they no longer see it as the panacea, the must have investment. Everybody is now very cautious on property, and that's a problem because the Chinese economy has lost its heartbeat. This chart shows the year on year movement in new home sales in China, and the scale on the right hand side of this chart goes from plus 10% at the top to minus 50% at the bottom. And normally, when we're looking at the movement in home sales, we wouldn't be talking about 50% movements, but this is what's happening in China. And what this chart shows is that in 9 out of the last 12 months, China has seen a year on year fall in the value of new home sales. And in March 25, new home sales were down by 11.5%, which in itself is an incredibly bad figure. However, if we expand the scale of this chart to show what's been happening over the past 3 years, you can see that some seriously bad things have been happening in terms of the volume of new home sales. And in March 2024, new home sales were down by 45.8%. So when you compound those two levels, we are seeing an absolute collapse in new home sales. And as I mentioned earlier, new home sales are the main source of sales for Chinese property. So this represents an absolute calamity in terms of the impact on the economy. Now, in terms of looking at the prospects for the property market, this chart shows the year on year movement in investment into the property sector in China over the past 12 months. And once again, here you can see that this chart starts at 0% at the top and goes down to minus 12%. And in every single one of the past 12 months, the amount of money being invested into the property sector has fallen. And the most recent data for March 25 shows that it's down by 9.8%. And if we expand the scale of this chart to show what's been happening over the past 3 years, you can see that in March 24, investment into the property sector was down by 9.5%. So the recent figures are on top of last year's fall. And if we look at March 23, they were also down by 5.8%. So we've got 3 years of compounding falls of investments into the property sector, which tells us that nobody wants to invest in property in China at the moment. And this market hasn't bottomed out, and it's not likely to come back anytime soon. So all of this data tells us that China is now becoming even more reliant on its export markets. And Donald Trump's tariffs are going to deal a serious blow to those exports in the rest of 2025. So what's the summary and conclusion today? Well, I wanted to post this video because we've got the latest data coming out of China, so I wanted to go through that. And I also wanted to make sure that you weren't misled by any headlines, because you may have seen a headline saying GDP growth in the first quarter of 2025 broke expectations for China. And on paper, they did. They came in at 5.4% growth. However, the majority of that growth was achieved in 2024. When you're looking at a 12-month rolling figure, it's 4 quarters added together. And the figures for the first quarter of 2025 on a standalone basis show that on a run rate, China would come in at less than 5% for the rest of 2025 if everything else stayed as it is right now. So that means that it would be below its target, so it's underperforming. However, that figure doesn't take account of what's going on with regards to the tariffs, and also the fact that China is now becoming more and more dependent on its exports. As we've seen in today's video, the property sector is continuing to have major problems. It's been in the doldrums for the past couple of years, and it's actually getting worse. We're seeing new home prices continuing to fall. We're seeing the value of new home sales continuing to go down, and there is a lack of investment into the sector. And all of this is because Chinese consumers have lost confidence in the market. Not surprisingly, because a lot of them have lost a lot of money, and many of them actually paid in full for properties that haven't even been constructed. So they gave all of the money over to the property development companies. Many of those individuals actually took a mortgage in advance of the property being built. It's never been built, and so they're now paying off that debt and they don't have anything to show for it. So when you hear stories like that, it would definitely put me off investing into that market, and it's putting off hundreds of thousands of Chinese individuals. So I think the property market is shot at the moment. It's very unlikely that that market is going to come back at any point in the near future. So China is now totally dependent on its export markets, because if you've been following the channel, you'll know that it's now in a deflationary cycle. Prices are actually falling in China at the moment, year on year. They're down by 0.1% in March. And producer prices, the factory gate prices, the amount that companies are selling their products for, have fallen for 30 consecutive months. And that's a major problem, because if your costs are going up, but your prices are going down, that's going to hit your profits. And that's what we've seen in today's video. It's estimated that more than 50% of Chinese companies are now banking losses. So they're not actually making any profit. They might be selling things overseas, exporting things, getting some money in. But if that money doesn't cover all of your costs, then you're going to make a loss. And what that means from China's point of view is that those companies aren't paying any tax. And we saw the data showing that tax revenues have been down in 5 of the past 6 quarters. So China isn't receiving lots of income from all of these companies, and it's now having to pull back on things like infrastructure spending. So China is in a really difficult situation right now. And this is before Donald Trump's tariffs kick in. And as we've talked about in many previous videos, China exported over $400 billion worth of goods in 2024 to the USA. Now, those goods at the moment are going to be hit with a 145% tariff. So realistically, nobody's going to buy them. US consumers will not want to pay more than double for those products. So as it stands right now, unless China agrees some form of side deal with Donald Trump, all of those exports are going to come down massively in terms of volume. So the Chinese companies that have been making all of these things are going to see a fall in their revenue at the same time as they've been banking losses. So all that means is that their losses are going to increase. So all of this represents seriously bad news for those companies, but also for the Chinese economy. Now, as I mentioned at the start of today's video, China is the second largest economy in the world. And so if the Chinese economy starts to contract, it will have an impact on every other country, and it will have an impact on the global economy. So even though China is in a very dire situation, it also means that the global economy will also see a contraction, and that's going to be bad news for everybody. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting the channel. If you bought me a coffee or sent me a YouTube super thanks, or signed up as a Patreon or a YouTube member or buy me a coffee member, thank you so much for that support. Really means a lot to me, and here's something to put a smile on your face. click the link in the description below for 15% off Investing Pro and start using Investing Pro today.